Hi, Matt McAleer, Director of Equity Strategies here at Cumberland. Just after the close on the 18th here on our trading floor for equities. Interesting week, a lot of strength. It was nice to see. Some of the areas that got hit the hardest in the fourth quarter, which are small and mid-cap, have rebounded beautifully since January 1st. You have small mid-cap up 9–10%, S&P up 6+%. So it's been solid all around. What that equates to is about a 50% retracement of the downdraft we saw since early September. That 50% is an area that we would normally expect to see a little bit of resistance, a little bit of selling. We'll see if that happens next week. But we've been in the U.S. strategy, a beneficiary of these small and mid-cap moves, where we're allocated about a third of the portfolio there. So it's a tough fourth quarter in some of those sectors, and we've had a nice bounce. Over in international, we've been kind of pounding the table in emerging markets, and they continue to act well. We've talked about Indonesia. We've talked about some of our Asian positions there. We did add a new position earlier in the week, South Korea. Traded well. We'll see what next week brings. We added some additional exposure in the broad emerging markets. We always try to look at the good and the bad, or the good and what we should be concerned about. We like the way emerging markets are acting. We never dismiss the fact that the volatility there is always at a multiple to developed and or our U.S. area. So we are concerned. We keep an eye on that level. We don't want to get too overweight that area. In tactical, we did add a couple positions this week. I've mentioned in the past that we're watching Berkshire Hathaway. Berkshire made a nice higher low for us in that 197, 198 area. We added that to the portfolio. We also added some emerging markets there. One of the themes I've been discussing over the last couple of months is how this market reminds me a bit of 2011. All markets are different. They're like snowflakes. From a distance, they look the same. When you get up and look at them closely and get involved and look at them under a microscope, no two markets will ever trade the same. But that said, the June through September and October downdraft in 2011 was relentless, followed by a 40–50% move higher, and then a retest to a higher low in Halloween into November. We're looking similar to that. I'd like to do without the retest if we can. That may not be possible. We're at about a 50% retracement level. That's a natural selling area for some traders. So in terms of what we're looking at next week, let's see if there's any more trade headlines. We try to not look very far beyond our own headlights. Those headlines, while they can be a daily trade and cause daily action, can dissipate rather quickly. We'll watch headlines, we'll watch interest rates. Fairly flat this week in rates, so we don't expect any real moves there over the next 5 to 10 days. Everyone have a great weekend and good trading to everybody.